Eric Muathe with Muathe.com with about 4 hours to go before the close of Friday's session, the first Friday of 2017. Let's take a look at markets here. Markets trading at the highs for the day. As far as the general market is concerned, Dow, S&P 500, all screaming to, I believe, daily highs. If they close around here, it's going to be fresh daily closing highs. And again, as we come here close to the end of the hour, I'll discuss with you why I think the small time frames might be calling for a slight pullback from current levels based on intraday action. Hence the reason why this video is coming to you a little bit earlier than usual. And right now we see that crude oil is up about 0.65, gold is down about 0.81. Let's take a look at those charts. Let's begin by taking a look at the NASDAQ. And here we can see the NASDAQ pressing to all-time weekly closing highs. The problem is we continue seeing resistance, or at least that the market is coming back to test this clearly defined line of resistance on the NASDAQ. Until the NASDAQ can clear this line, we have to assume eventually this is going to be good enough to stop the current move to the upside. Let's take a look at the daily. And even as the NASDAQ trades at all-time intraday highs, you can see here an improvement in price action day to day. But take a look at the RSI. We continue seeing this line on the top side still showing some type of negative divergence, especially if it stalls below this line. So here, if the RSI stalls the current movement, we can see that negative divergence eventually sets the stage for a pullback. Otherwise, the market would need to clear that line if it is to see higher prices. If we take a look at the Dow, which is even higher at the highs for the day, and I believe it's also pushing to as close to all-time daily closing highs as possible. And one thing we can see here is that now the Dow is back above the magic number of 69.1. As long as the daily chart is back above 69.1, then clearly we can start seeing evidence that this market wants to move higher. Keep in mind this big move here from here to about somewhere there all happened while the RSI was trading above 69.1. So it's a big deal if the market is above 69.1. Now, if it is rejected as it tries to move above 69.1, that's going to be visual evidence that the market is running out of momentum. Keep in mind, we are not too surprised with the Dow strength because the Dow is coming back to test this line. This black line was the previous line connecting RSI highs. Once the market cleared that line, which is here, you can see that the market went on a fantastic run. We've come back over the last 2-3 days and we held on this line, which is the reason why the market continues to hold and try to attack fresh highs. So as long as the Dow stays above this line, you can expect the markets to be stable, if not outright bullish. Now I'll show you why I was saying at the beginning of the video here with 4 hours to go, why I think the market could be trying to trap people to go long. I think the hourly chart, as we've been observing over this past couple of days, is that what the market is doing in essence is coming back to test this recent break level. That RSI break level brought the market off the recent highs. So the RSI break right there corresponds with coming off the highs here. We got a shallow pullback. Sometimes these shallow pullbacks are warning signs. And what the market is doing is, in essence, is coming back to test that break level. And as of right now, we can see that even at the highs of the day, the market has just succeeded to come back and test that line. So that's one visual evidence that this could be a trap for those who are going long. And this is confirmed if you take a look at the Dow from a 30-minute perspective. So Dow 30-minute. And from this chart here, we figure out where the Dow made a high, which is here, which corresponds with this RSI high. So that was a break level there. So let's draw that line. So the RSI did break down. There was a trend break right there. We take that information and use it. And you can see what the market is doing is coming back to test this line, which recently has been a problem. So we hit this level twice, which gave us these highs here and here. We hit it here again, which is the high here and here, coming back and doing the same thing right here over the last hour. And as long as this is resistance, we can start seeing that this is where the market might start pulling back hour to hour. Switch gears a little bit here. Let's take a look at the S&P 500 weekly. So SPX weekly here, trading at all-time weekly closing highs. But now if you take a look at this weekly chart and go take a look at the 3-year weekly time frame, we see that for the S&P 500, just like we saw for the Dow, pretty much what the S&P 500 is doing is coming back to test this topside resistance line. So until we move above this line here, one can start seeing potential that if this is confirmed as resistance, as we go into the new week, if this is confirmed as resistance, then somewhere around here, of course, we're going to start expecting this market to pull back. Otherwise, if the bulls want to record sustained higher levels, then they would need to clear this line of resistance and take the market beyond the current levels. Otherwise, pretty much to summarize this weekly chart, S&P 500 coming back to test this line. We've been unable to move above this line in 2016 during these highs here in terms of RSI, and recently late 2016 we stalled there, coming back to test it here. If it is confirmed as resistance, then we start seeing another reason why the market could stall around current levels. Obviously, bulls in the market would like the market to take out that resistance line. If the market takes out that resistance line, be on the lookout for much improved highs in the coming weeks and in the coming months. Let's take a look at the S&P 500 daily. And here what we are seeing is the market moving to all-time intraday and daily closing highs. So if the market was to close here, that would be a move to all-time highs. Yet, take a look at what the RSI is doing. We might start seeing here evidence of the market running out of energy. So that negative divergence is something to keep an eye on. It tends to indicate that the market is running out of technical strength. And in fact, if you take a look at the S&P 500 hourly, this is consistent with a market that looks like it wants to pull back. You can see here this break, so RSI break there, brought the S&P 500 off the highs there, and ultimately we had a shallow pullback. Again, this pullback sometimes tend to be warning signs, and so we draw a line from there, and you can see as of right now, even S&P 500 here with about 4 hours to go is coming back and seems to be showing potential resistance on this line, which could be a problem for bulls if they cannot clear that line. We take a look at the S&P 500 from the 30-minute time frame. And from the 30-minute time frame, we can also see the same type of analysis as we saw on the hourly, which is pretty much coming back to test this break. This trend line break brought the market off the highs there of mid-December. We draw a line from there. And essentially what we are doing is coming back to test that topside uniformity line. And the last time we hit that line was here for this short-term highs, and we got a shallow pullback. Pretty much what we are doing here, and it's a big question mark. Of course, we don't know how the market is going to respond here, but the more the S&P 500 cannot move above this line, the more we start looking at another confirmation of negative divergence. Negative divergence, which generally sets the stage for a pullback, and also would be confirming resistance on this line here. All those two things happening, negative divergence and resistance on this blue line, might suggest that the next meaningful swing trade for the S&P 500 is actually lower. Now keep in mind, if we take a look at the Dow's weekly chart is absolutely very superior, very strong, because it is holding above 69.1. I've been saying that you should not expect the market to pull back until the Dow comes off this level. So as long as the Dow is holding above 69.1, this market is going to continue to have a bias to the upside, stability and a bullish action as long as the Dow is holding above 69.1. And also keep in mind that as long as the Dow is holding its monthly chart above the same threshold of 69.1, don't expect any market pullback. At some point, if the Dow moves back below 69.1, then that is when we might start looking for reasons to be bearish. But for now, the Dow is holding up very well above the threshold of 69.1 on its monthly RSI. We have to assume that this market continues to be strong. And if you're wondering why 69.1, take a look at the description. I'll have a link explaining why this number is critical. And to conclude here, let's take a look at the S&P 500 on the monthly chart. And here we can see the S&P 500 trading a tad bit below that critical number of 69.1. But let's watch this, because if the S&P 500 can move above that threshold, then this market is going to see much improved price highs. And at the same time, let's be vigilant, because if the S&P 500 fails to move above 69.1, and in fact if it turns down for the month, that would be very bearish. Otherwise, in conclusion, the reason why I'm recording this weekend analysis video a tad bit earlier than usual is because on the S&P 500, I see that there's possibility here that the market is coming to a point of stalling hour to hour. We are seeing an improvement in price highs, but we see the possibility of negative divergence, and also we see the possibility of market coming back to stall on the line we drew. So if those two things are taking place, I'd just like to sensitize you as subscribers as to the fact that we don't need to chase. I'm going to continue researching here and try and find you fresh ideas for the weekend. Otherwise, take a look at yesterday's video, which was Thursday, where we discussed some ideas that I think are already starting to show signs of taking place and probably responding in the direction we've been suggesting. Eric Muathe with Muathe.com. Let me rush this to you. As always, good luck, peace, and blessings. Be on the lookout for part 2, which should have additional ideas for you guys to consider. Peace and blessings. Have a great weekend. I am out.